Thinking about buying a house in the USA in 2026? It could be the best financial move you ever make. But there's a catch. The real estate market has a set of unwritten rules, and not knowing them can cost you a fortune. Today, I am pulling back the curtain to reveal the secrets that seasoned investors and real estate pros use to get ahead. These are the things nobody tells you, but you absolutely need to know. Whether you're a first-time home buyer, dreaming of your own place, an investor looking for your next big win, or an international buyer trying to navigate the US market, this guide is for you. We're going to break down the hidden costs that blindside most buyers, the common mistakes that can derail your dreams, the market risks you need to watch out for, and the smart strategies that will put you in the driver's seat. By the end of this video, you'll be equipped to avoid the traps and make a confident, profitable real estate decision in 2026. Let's get started. First up, let's talk about the biggest surprise for most buyers. The hidden costs. You've saved up for your down payment. You've got your pre-approval letter, and you think you're all set. But the sticker price of a home is just the beginning. The real cost is much higher. I'm talking about closing costs, which can be anywhere from 2% to 5% of the home's purchase price. So, on a $400,000 home, you could be looking at an extra $8,000 to $20,000 right at the finish line. What are these costs? They include things like loan origination fees, appraisal fees, title insurance, attorney fees, and prepaid property taxes, and homeowners insurance. Many buyers are completely unprepared for this and have to scramble for cash at the last minute. Or, eben worse, losete deal. The secret here is to ask your lender for a detailed loan estimate form right from the start. This document breaks down all the estimated closing costs, so you can see the full picture and budget accordingly. Don't just focus on the down payment. Plan for the closing costs from day one. Now, let's move on to the common mistakes that can turn your American dream into a financial nightmare. Mistake number 1. Falling in love with a house before you've fallen in love with your budget. It's so easy to get swept away by a beautiful kitchen or a perfect backyard. But emotion is the enemy of a smart investment. You must, and I mean must, get pre-approved for a mortgage before you even start looking at houses. A pre-approval tells you exactly how much you can afford. It prevents heartbreak and keeps you grounded in reality. It also makes you a much stronger buyer in the eyes of sellers. Mistake number 2 is skipping the home inspection. I cannot stress this enough. You might think you're saving a few $100s, but you could be buying a money pit with thousands of dollars in hidden problems, like a faulty foundation, a leaky roof, or outdated electrical wiring. A professional home inspector is your best friend. They will give you a detailed report on the true condition of the property, giving you leverage to negotiate repairs with the seller or the option to walk away from a bad deal. Never, ever skip the inspection. It's the cheapest insurance you'll ever buy. Let's pivot to the market itself. What risks should you be aware of in 2026? The real estate market is cyclical. It goes up and it goes down. A big mistake is assuming that prices will always go up. While real estate has historically been a great long-term investment, there are no guarantees, especially in the short term. One major risk is rising interest rates. Even a small increase in mortgage rates can significantly increase your monthly payment and reduce your buying power. For 2026, it's crucial to stay informed about the Federal Reserve's policies and economic forecasts. Lock in a good interest rate when you can. Another risk is buying in a bubble market. Some cities experienced rapid price appreciation that isn't sustainable. When the bubble pops, prices can fall, leaving homeowners with a property worth less than what they paid for it. How do you spot a bubble? Look for signs like prices rising much faster than local incomes and rents, or a frenzy of speculative buying. Do your research. Look at long-term market trends, not just the last year. A smart strategy is to focus on areas with strong job growth, good schools, and a diverse economy. These fundamentals create stable, long-term demand for housing. So, how do the pros make money in any market? They use smart strategies. The first is what I call buying the location, not just the house. You've heard it a million times. Location, location, location. But what does that really mean in 2026? It means looking beyond the four walls of the house. Is it in a good school district? What are the crime rates? How long is the commute to major employment centers? Are there new coffee shops, parks, or grocery stores being built nearby? These are all indicators of a neighborhood on the rise. You can fix up a house, but you can't move it. A good location will protect your investment and ensure future appreciation. Another pro strategy is to look for value, not perfection. The perfect move-in-ready house in the best neighborhood will always come with a premium price tag. Successful investors often look for the worst house in the best neighborhood. A property that needs cosmetic updates, like new paint, flooring, or kitchen countertops, can often be bought at a discount. With a little bit of sweat equity or a small renovation loan, you can transform it and build instant equity. This is how you create value instead of just paying for it. Be willing to see the potential that other buyers might overlook. Now, a special note for my international buyers. The US market can seem complex, but it's very open to foreign investment. The biggest hurdle you'll face is financing. Many US lenders have stricter requirements for non-residents. You'll likely need a larger down payment, often 30% or more, and will have to provide extensive documentation of your income and assets from your home country. It's also crucial to understand the tax implications. ULL need to work with a tax advisor who specializes in international real estate to understand things like FIRPTA, the Foreign Investment in Real Property Tax Act. Don't go it alone. Building a team of experts, a good real estate agent, a mortgage broker experienced with foreign nationals, and a tax advisor is absolutely essential for a smooth transaction. Let's talk about negotiation. This is where you can save thousands. Many first-time buyers are too timid to negotiate. Remember, the list price is just a starting point. Your real estate agent should provide you with comps or comparable sales of similar homes in the area. This data is your ammunition. If the house is overpriced compared to recent sales, make a lower offer and use the data to justify it. You can also negotiate on more than just the price. You can ask the seller to cover some of your closing costs, include appliances, or make certain repairs before you close. A good negotiator knows that everything is on the table until the final contract is signed. Let's recap the secrets we've uncovered. First, plan for the hidden costs. Your budget needs to include much more than just the down payment. Think 2 to 5% of the purchase price for closing costs. Second, avoid rookie mistakes. Get pre-approved for your mortgage before you start house hunting, and never, ever skip the home inspection. Third, understand the market risks. Interest rates and local market bubbles can impact your investment. So do your homework, and focus on fundamentals like job growth. Fourth, adopt pro strategies. Buy for location, not just the house, and look for opportunities to add value. And finally, if you're an international buyer, build a team of experts to help you navigate financing and taxes. Buying a home is one of the biggest financial decisions you'll ever make. In a dynamic market like the one we anticipate for 2026, being prepared is not just an advantage, it's a necessity. By understanding these unwritten rules, you're no longer just a hopeful buyer. You're a savvy investor, ready to make a smart, confident, and profitable move. You're ready to avoid the common traps and secure a piece of the American dream on your own terms. Thank you so much for watching. I hope this guide has armed you with the knowledge you need to succeed in the 2026 real estate market. If you found this video helpful, please give it a thumbs up and hit that subscribe button. Don't forget to ring the bell so you don't miss our future videos on real estate, finance, and investing. Do you have any other real estate questions or secrets you've learned? Drop them in the comments below. I'd love to hear from you. Thanks again, and I'll see you in the next video.